What's going on, ROR fam? I hope you guys are liking the new content we have been putting out. We've been getting a lot of views, and I just want to say thank you for showing love, showing support. It really means a lot, and when you guys do that, it just motivates me. It pushes me to go so much harder. So in this video, what I'm going to go over, I think this is a very important subject. I'm going to show you guys like how to use lot sizes with indices, Forex pairs, and cryptos. At the end of the day, I want you guys to realize that we all have our different ways of thinking. These are things that have worked for me as a Forex trader, and I'm gonna help you guys with that exact process on how to actually use proper risk management. So in this video, we're gonna be going over on what lot sizes use, proper risk, and I'm gonna actually add in a bonus. I have a very important topic to go over with you guys, so stay tuned. I'll see you in a second. What is going on, traders? I hope you guys have your notebook right beside you so you guys can take notes, because hey, at the end of the day, note takers are action takers. So I really wanted to go over this subject. I've realized that most all my students lack this principle when it comes to trading, and not just my students. I know a lot of you watching this right now probably lack this principle, and it's a much needed topic for me to go over. So we're going to be going over lot sizes with Forex pairs and indices. And I know that a lot of you are probably starting to get into indices. You see me trading indices and other traders, and you're like, okay, how do I use proper risk management for this? Now, I'm going to give you guys a warning in just a second for the indices, but let's get started. So using proper risk management for Forex pairs. So for every $100 that you have in your trading account for Forex pairs, you're going to be using a 0.01 lot size. So every pip that you catch, you're going to be making 10 cents. So if you catch 10 pips, you're going to be making $1. If you catch 100 pips, you're going to be making $10. So I know a lot of you are probably like, bro, like, I'm not trying to make $1. I'm not trying to make $10 off one trade catching 100 pips. Like 100 pips in the Forex markets is a ridiculously big move. I'm not going to lie to you guys. Like, that's a big move in the markets. But at the end of the day, if you guys have $100 in your account, there's not much that you can do. Like, you just need to keep building your capital up, using proper risk management, so you can get to the point where you have $1,000 in your account, $5,000, $10,000, whatever amount you want to get to. You need to be patient with the process, and that's what I see too many people doing. It's like, at the end of the day, you don't have the capital to be using these crazy big lot sizes, but you're trying to rush the process. You're over leveraging your account so you can try and get these big profits so you can keep compounding your account. But at the end of the day, I always tell my students this, like, just focus on the long-term aspect. Stop focusing on the next day. Stop focusing on the next week. Focus 3 to 5 years down the road. Because yeah, you might have a couple $100 in your trading account right now, but imagine how much capital you could have in your trading account 3 years down the road. You could have 100K in your trading account, and then you could be using ridiculously big lot sizes. You could be using 10 lots and catch a couple of pips, and you're making a couple of $1,000. So just focus on the long-term aspect, guys. I cannot stress that enough. Okay, so for every $1,000 that you have in your trading account, you're going to be using a 10-cent lot. So you're going to be making $1 for every pip. So you catch 10 pips, you're up $10. You catch 100 pips, you're up $100. So at the end of the day, like, really just like focus on using proper risk, guys. And so this adds up. So basically, like I said, for every $1,000 you use, you're going to be using a 10-cent lot. And then I also said a second ago, for every $100, you're going to be using a 0.01 lot, a 1-cent lot. So it's like, if you have $1,200 in your account, you could be using a 0.12 lot, a 12-cent lot. Okay, and then it's like you're making $1.20 for every pip that you catch versus just making $1 for every pip that you catch. Okay, here's where it gets really exciting. And I remember when I started using standard lots, I got super freaking pumped up, and that's when it really got fun to start trading this way. Okay, so for every $10,000 you have in your trading account, use a 1.00 lot, a $1 lot. So for every pip that you catch, you're going to be making $10. So you catch 100 pips, or you catch 10 pips using a standard lot, you're up $100. You catch 100 pips using a standard lot, you're up $1,000. So it's really going to get interesting. And guys, I just need to put this out there. If I feel like I'm stuttering, I can't talk clearly, I've been so congested lately. I don't know what's going on. I think it's my allergies, but please forgive me. So this is an example for you guys. If we go from 106.000, I missed a zero there, to 106.100, that's a 10 pip move. So you guys need to look at the lot size and see how much you would have made for that 10 pip move right there. That example was from USD JPY. It's not from Euro USD or GBP USD. So the numbers do differentiate. The price does differentiate for USD JPY and GBP JPY, or any pair with JPY in it, versus other pairs like Euro USD, GBP USD, something like that. So here is the warning right here, you guys. Indices like US 30, the Dow Jones, we have the S&P 500, that's SPX 500, then we have NAS 100, the NASDAQ. Those are indices like you guys need to be very, very careful. And I would not recommend trading any indices unless you have $1,000 in your trading account. Okay, also the lot sizes vary with your broker. I know most brokers, or some brokers, if it's like I'm using a 0.01 on Hugo's Way or KLT Forex, something like that, on other brokers it might be a 10-cent lot that's the same as a 0.01, or vice versa. It's all dependent upon your broker, so I would literally look into your broker, maybe ask them in an email or in their live chat what the lot sizes are, how they work with that broker. Okay, but with the brokers that I've been working with lately, for every $1,000 in your account, you're going to use a 0.01 lot size. So you're going to be making 10 cents per pip here. So the pip count is much higher on indices, guys. Like earlier today, I was trading the indices, and I think let me bring this up so you guys can see. Yeah, this is my day so far trading. I hope you guys can see. But you can see off a 10-cent lot, I made $770, and I caught, I think, like 70. I caught 700 pips on that trade. 777 pips on that one setup right there, and I made $770 off a 10-cent lot. So you guys can see, like, the pip count is much higher on indices. It's crazy how it works. But so for every $10,000 you have in your account, you're going to be using a 0.10 lot, a 10-cent lot, $1 for every pip. For every $100,000 in your account, you're going to be using a standard lot, a 1.00 lot size, $10 for every pip. So for an example, this is how the pips actually work with indices. If we go from 28700.00 to 28700.10, that is 1 pip. Okay, you kind of have to do some experimenting with it, kind of see how indices work. But I would definitely recommend, if you're looking to get into indices, definitely open a demo account with your broker, kind of see how the indices work, the pip count, everything like that for your broker. And just be very cautious, guys. Like I'm telling you, like indices fucking move like crazy. I'm actually in this setup right here on the indices right here on US 30. If I go to the 4-hour chart, let me see if I can show you guys this real quick. So yeah, this is my bias on US 30 right now. You guys can see. Okay, so I noticed that we just been forming lower lows, lower highs, lower lows, lower highs, lower lows, and then we do have a lower high right here. I am looking at the previous 4-hour candle that's giving me confirmation that we do have more bears in the market versus bulls. So I'm definitely looking for a rejection of the zone and for it to drop down pretty soon here. I am going to see how this next 4-hour candle closes. We have an hour and 45 minutes left, but I'm going to kind of keep my eye on that. Okay, now let's go back to this. Now, here's a cheat code. I know you guys have been kind of waiting for this part, but this mainly works for more, I would say, Forex pairs, not so much indices. So you can use a bigger lot size if you have a smaller stop loss. Let's say we have $1,000 in our trading account. Make sure you guys are taking notes. Like this is very, very vital. If you can't take notes, just take a screenshot on your phone, something like that. Okay. Let's say we have $1,000 in our trading account and we are risking 10% of our capital. Also, most people will tell you risk 2 to 3% of your capital. Like guys, at the end of the day, it's fucking personal preference. Like we're not financial advisors. I'm not a financial advisor. I'm just giving you tips and tricks and things that are working for me that I have noticed to actually work for me. Okay, so at the end of the day, if none of this makes sense, That's completely fine. I don't give a fuck what you guys think. Like, do whatever works for you, but at the end of the day, I'm just trying to help you guys out and show you things that have worked for me. Okay, so let's say we're risking 10% of our capital. We have a stop loss at 20 pips. Usually, like I mentioned a second ago, we'd use a 0.10 lot, a 10-cent lot, but 10% of $1,000 using a 1.0 or a 10-cent lot means that we'd have to go up negative 100 pips to hit our $100 in losses. So our stop loss would have to be 100 pips, okay? But we can use a 0.50 lot, a 50-cent lot size, and risk 20 pips to equal $100, 10% of our account. So you can use a bigger lot size if you have a smaller stop loss. So it's like if I have $1,000 in my trading account and I have a stop loss at 10 pips, I can use a standard lot. I can use a standard lot. If you have enough leverage and you have enough free margin in your account, your broker should allow you to be able to use a standard lot on a $1,000 account. At the end of the day, guys, like I said, it's all dependent upon your broker and things like that. There's a lot of aspects that go into it. But it's like, you guys need to realize, if I go right here, let's say we're looking at AUD USD, let's go to the 5-minute chart. Okay, let's say we're shorting. We're looking at this market right here. Let's say we are going to go short right here. We saw this hammerhead candle right here, and we're like, bro, like every time we see a hammerhead candle like that with a long wick, it's going to reject that zone and go down, and that's exactly what happened. You guys can see that we had a nice drop after that. So let me move this over here real quick. Yeah, I'm going to move my face over there real quick. But you guys can see that, let's say we're shorting this and we had our stop loss above previous resistance on that candle. From current market price where it closed to there, bro, look, it's not even 2 pips. It's 1.5 pips right there. So you could have used a standard lot right there. We had a 1.5 stop loss right there. Okay, and let's go down from our entry right here. Let's say our target zone was going to be right down here, previous support. Look, from current market price to there, we have 8 pips. So if you're using a standard lot, like, you could have made a quick $80 right there. Obviously this trade is still in fluctuation, but at the end of the day, you have like $80 on the line versus 10.5, $15 on the line. So you have $15 of risk to $80 of reward right there. And let's pull this tool up right here to see our risk to reward ratio. Guys, we would have had a 4.3 risk to reward. I think that's a 3 right there. It might be 4.5. Let me extend this out. Yeah, 4.5. So we have a 4.5 bigger times risk to reward ratio. So our stop loss is 1.7 pips, 1.5, and then our take profit is 7.7 pips. Okay, so we could have made $77, or we could have lost $17 on this setup right here. So at the end of the day, guys, like, that's a little cheat code I wanted to give you guys. I want to put you guys on game, but definitely take advantage of this opportunity that I'm giving you guys. This video has a lot of great information within it. I hope you guys enjoyed it. If you guys could subscribe to my channel, I would greatly appreciate it. And I will see you guys in the next video. Peace out.